If you're over 65 and you own your home, there's a stack of property tax bills sitting in your mailbox that you may not legally have to pay anymore. Not reduce, not appeal, stop. And here's what should make your blood boil. The county that mails you that bill every single year is never going to call and tell you that you've aged out of paying it. That's not their job. Their job is to collect. According to AARP, more than 9 million seniors in this country qualify for property tax relief they've already earned, and only about 8 in 100 ever claim it. 8. That means 92 out of every 100 are still writing a check they could have stopped years ago. Stay with me to the end, because number 5 is the biggest one of all. It's the one that lets some seniors legally stop paying their property tax entirely for the rest of their life, and it's the easiest one on this whole list to set up. Welcome back to Channel Name, where I break down the money rules for seniors over 60 in plain English, the ones nobody at the county office is in a hurry to explain. I'm going to show you all 5 of these, exactly which office to call, the exact name to ask for, how much it can save you, and which seniors each one helps the most. Before we start, one honest line. I'm not a tax attorney and I'm not your CPA, and I can't run your county's numbers for you. What I can do is hand you the exact form and the exact words to say, so the person who can run them has no reason to say no. Now let me kill the biggest myth right out of the gate. A lot of people hear senior property tax break and think that's only for low-income folks who are struggling. Wrong. And the wealthy ones assume it's some welfare program that isn't for them. Also wrong. Both of them leave the money on the table. These breaks were written for homeowners based on age and on the fact that you own the roof you live under, not on how big your bank account is. Some have income limits, plenty don't, and I'll tell you exactly which is which. And if you rent, don't click away. Number 3 has a version built specifically for renters, because in a lot of states the relief follows you too. Do me one favor while we go. Drop your age in the comments, just the number. I genuinely want to see who's watching this, and it tells me which of these to make next. Let me put a real face on this, because numbers floating in the air don't mean much. Meet Carol. She's 71, a retired bookkeeper, and she's a widow living just outside of Houston. She owns the little 3-bedroom she and her husband bought back in 1986. It's paid off, free and clear. She lives on about $31,000 a year, a Social Security check, and a small pension that stopped feeling small a long time ago. Her house, the one thing she owns outright, was costing her almost $4,000 a year in property tax. On $31,000 of income, that's not a line item. That's a wound. Every dollar I walk through from here comes out of Carol's pocket, and by the end, watch how much of it goes back in. Number 1, the over 65 homestead exemption. This is the foundation, and it's the one the most people miss because they think they already have it. Here's the catch. When you bought your house, you probably filed for a general homestead exemption, the standard one every owner-occupant gets. But the day you turned 65, a second bigger exemption opened up on top of it, and in almost every county you have to file a brand new form to claim it. Nobody mails it to you. What it does, in plain English, is knock a chunk of money straight off your home's taxable value before they ever calculate the tax. Carol's home was being taxed on its full value. Once she filed her over 65 exemption, the taxable value dropped. And here's where it gets real. In Texas, voters just raised the school district portion of that senior exemption to $60,000. $60,000 knocked off the value the schools can tax, on top of the regular homestead. For Carol, that was about $1,100 off her bill in the first year alone. In Florida, seniors can stack an extra exemption up to $50,000 on top of the standard one. In New York, some towns now wipe out up to 65% of a senior's assessed value. That's not a typo. 2/3 of the value gone before the rate ever touches it. Georgia, South Carolina, Indiana, almost every state has its own version, and the amounts are real money. Let me make it personal so you can find your own number. If your home is taxed on $200,000 of value and your senior exemption knocks off 60 of it, you're now being taxed on 140. On a typical rate, that's somewhere between $800 and $1,200 a year you simply stop paying. Bigger home, bigger swing. The action step is simple. Call your county appraisal district or assessor's office and say these exact words. I want to file for the over 65 homestead exemption. Ask for it by name. If you turned 65 any time in the last couple of years and never filed, ask about backdating it, because a lot of places will pay you back for the years you missed. Carol got 2 prior years credited. That was a check, not a discount. Number 2 builds right on that, and this is the one that protects you for the next 20 years. The school tax ceiling, also called the senior freeze on your tax rate. Stay with me, because this one's quietly enormous. Once you qualify at 65, a lot of states lock the school tax portion of your bill at the dollar amount you paid that first year. Freeze it. Your neighbor's bill keeps climbing every time the district needs money. Yours doesn't. It's frozen at the day you turn 65 level, and in most places it stays there for as long as you live in that home. Think about what that's worth over time. Property taxes have been climbing year after year all over this country. For Carol, freezing that ceiling meant that every increase the district passed for the next decade, increases her younger neighbors all absorbed, simply skipped her house. She's not paying this year's rate. She's still paying her 2025 rate locked. That gap widens every single year in her favor. The step here, when you call about number 1, ask in the same breath, does my over 65 exemption also freeze my school tax ceiling? And is it locked in automatically, or do I need to confirm it? Get them to confirm the year it's frozen at. Write it down. Quick gut check before we keep going. Did you know that even if your income is too high for some of these, age alone qualifies you for others? Type yes or no in the comments. I'm curious how many people were never told that. Number 3, the circuit breaker credit. This is the safety valve, and it's the one that catches the people the first to miss including renters. Here's how it works in plain English. A circuit breaker says that if your property tax, or for renters, the property tax baked into your rent climbs above a set percentage of your yearly income, the state sends you the difference back. It breaks the circuit before the bill overloads you. Right now, around 29 states and the District of Columbia run some version of this. So if you're on a fixed income and your tax bill is eating too big a slice of it, the math itself triggers a refund. On a smaller income, the credit is larger. It's designed to help the people getting squeezed the hardest. Picture 2 seniors. One brings in $25,000 a year with a $3,000 tax bill. That bill is 12% of her income, way over the line, so her refund is large. The other brings in $50,000 with the same bill, that's 6%, so her credit is smaller or maybe nothing. The lower your income against the bill, the more comes back. That's the whole design. And here's the part most renters never hear. For a renter whose landlord quietly bakes the building's property tax straight into the monthly rent, several of these states let you file as a renter and claim a slice of it back, usually by treating a set percentage of your rent as property tax you paid. New Jersey, Michigan, and others run exactly this kind of program. The action step, search your state's name plus the words property tax circuit breaker or property tax credit, or call your state Department of Revenue and ask, do you have an income-based property tax credit for seniors, and can I claim it as a renter? Ask for it by name. The forms have an income box and a deadline, so don't sit on it. Number 4, the assessment freeze. And this is a different animal from number 2, so don't mix them up. These are 2 completely different things. The tax ceiling in number 2 freezes your tax rate. The assessment freeze locks your home's value. Here's why that matters. Your tax bill is your home's value times the rate. Number 2 handled the rate. This one handles the value. It stops the county from raising the number they're taxing in the first place. Arizona has a well-known version that locks your limited property value in place for a 3-year renewable stretch. Illinois runs a senior freeze in Cook County and far beyond it. Texas freezes the value too, and a string of other states do their own take on it. When home prices in your neighborhood shoot up, and you've watched them shoot up, you've seen what the house down the street sold for. Everyone else's taxable value climbs right along with it. Yours sits still. Let that sink in. The same boom that's making your house worth more on paper is quietly raising your tax bill every year you don't have this freeze. With it, the county is frozen out. For a senior in a hot housing market, this one quietly saves more than all the others combined, because it shuts off the engine that's been driving your bill up for years. Here's the honest catch. A number of these value freezes carry an income limit, so this is the one to ask about carefully. The step: ask your assessor, do you offer a senior assessment freeze or a valuation freeze? What's the income limit and what's the filing deadline? That deadline matters. In a lot of counties, it lands in spring. Places like Cook County, Illinois close it around the end of April, and other states have their own cutoffs. Miss the date and you wait a whole year. And now number 5, the one I told you to stay for. This is the big one, and I saved it for last on purpose, because it's the only one on this list that can let you stop paying your property tax altogether. The property tax deferral. Here's the plain English version, and read it carefully because the word deferral scares people for no reason. If you're 65 or older, a large number of states will let you legally postpone your property tax, the whole bill, not a piece of it, for as long as you live in your home. You stop writing the check. Now here's the honest part, and I'm not going to dress it up. It's not erased. The unpaid amount sits as a quiet lien against the house and gets settled later, when the home is eventually sold or passed on, usually with a low interest rate attached. In Texas, under Tax Code Section 33.06, a homeowner 65 or older can defer the entire property tax indefinitely, and the interest is capped at 5% a year. Think about what that actually means for someone like Carol. She's 71. She has no intention of ever selling that house. So for her, Deferring means she may quite literally never write another property tax check for the rest of her life. And the balance is settled from the value of a paid-off house she wasn't going to spend anyway. That's the forever in the title. And it's real. This is the one 92% of eligible seniors never use, usually because the word scared them or nobody explained it. The step is almost insultingly simple. One form, often a single-page affidavit, filed at your county. Call and say, I want to file a property tax deferral affidavit for an over 65 homeowner. Ask for it by name. I'll be straight with you. This one isn't right for everyone, especially if leaving the house completely tax clean to your kids matters more to you than keeping your cash now. That's a real conversation to have with your family. But for a senior who's house rich and cash tight, it can hand back every property tax dollar immediately. Now let me add it all up because this is where it stops being theory. Carol started at almost $4,000 a year. Her over 65 homestead exemption took about $1,100 off the top. Her frozen school tax ceiling stopped roughly $300 of new increases from ever reaching her. She checked her state's circuit breaker and, on her income, qualified for a few hundred more back. Between just those, she'd carved her bill down by well over half, call it $2,000 a year back in her pocket, every year, for as long as she owns that home. And then there's number 5 sitting in her back pocket, ready whenever she wants it, capable of pausing the rest of the bill entirely. Let me make that real the way Carol did it. She didn't do it all at once, and she did one call a day. Monday, she filed the over 65 homestead exemption. Tuesday, she confirmed her tax ceiling was frozen and got the year in writing. Wednesday, she looked up her state's circuit breaker credit and started the claim. Thursday, she asked her assessor about the valuation freeze and the deadline. Friday, she picked up the deferral affidavit and put it in her drawer, just in case. 5 days, 5 phone calls. By the end of that week, she had cut more than $2,000 off her yearly cost and locked in protection that compounds in her favor every year prices go up. $2,000 a year doesn't sound like a fortune until you stretch it across the next 15 or 20 years she'll live in that house. That's $30,000 to $40,000 on a house she already owns for 5 phone calls. Here's what genuinely bothers me about this one. Carol wasn't gaming anything. She wasn't taking a dime she hadn't earned. She paid that property tax in full for almost 40 years on time while raising a family in that house. The exemptions, the freezes, the deferral, every one of them was written into law on purpose for people exactly like her. She just happened to find out they existed. And that's the whole difference. The seniors who keep this money aren't richer than you, and they aren't luckier than you. They're just the ones who picked up the phone and asked for it by name. So do something with this. Send it to one person you know who's over 65 and still owns their home, one neighbor, one sister, one old friend who's been quietly overpaying for years. This could be the few $100s a month that takes the pressure off their whole year. If it was useful, give it a like so the next worried homeowner finds it, and subscribe to channel name T. I dig out one of these senior money rules every week, and the county office is never going to do it for you. Then tell me down in the comments, which of the 5 is the one you're going to claim first? Drop the number. 1, 2, 3, 4, or 5. And if you want the simple one-page checklist of the exact phone scripts Carol used for all 5, I'm putting it together for you. Say checklist in the comments and I'll point you to it. Your home is paid for. It's time the tax bill caught up with that.